Welcome to World Insight, coming to you live from Beijing on CCTV News. I'm your host, Tian Wei. On today's program, Chinese e-commerce giant Alibaba is caught in the U.S. Securities and Exchange Commission probe over its accounting practices in a case that has the governments of both countries in a deadlock. Will there be solutions? And we sit down with author and investor Jim Rogers, who shares about his lessons learned on the road around the world and his personal take on emerging economies. And we begin today's show with e-commerce giant Alibaba. In these years, there have been more and more Chinese companies listed in U.S. stock market. For Nasdaq alone, there were more than 130. Among them, Alibaba is one of the biggest. Recently, this titan is under investigation over the past few months for its accounting practices from the U.S. Securities and Exchange Commission and the Public Company Accounting Oversight Board. U.S. regulators want to ensure auditing standards and protect investors in the U.S. market, as they say. However, China's government has sovereignty concerns in these kind of inspections. So how can the dispute be settled? Before our discussion, let's take a look at this.
Charging forward, Alibaba announced financial results for its second quarter this week, which was stronger than expected. The online retail giant's revenue surged 59% year-on-year to $4.84 billion US. Among them, international sales have seen a sharp increase of 123%, hitting $165 million US. However, this shining performance is somewhat overshadowed by the U.S. Securities and Exchange Commission, or SEC, investigation into Alibaba's accounting practices. The investigation includes Alibaba's accounting for its logistics unit, Cainiao Network, and the reporting of operating data from Singles Day. Though the results of the probe aren't clear yet, Alibaba hasn't stopped spreading its business into global markets.
Going forward, Cainiao will not change. We hope to enter into cooperation between all companies in the industry and realize a 72-hour global delivery and a 24-hour domestic delivery to do truly global trade.
There has been a long-running dispute between the US and China over the ability to vet auditors of Chinese companies listed on American exchanges. Many are hoping to finally see a breakthrough. The US audit industry regulator, the Public Company Accounting Oversight Board, or PCAOB, has announced plans to inspect two big US-listed Chinese companies, Alibaba and Baidu. With more and more Chinese companies marching into global markets, resolving business disputes properly has become crucial, and drawing clear lines would be helpful for all sides.
And for more on the case of Alibaba, we are having in the Beijing studio Jay Huang, who is the founder of J-Stone Venture and also former managing director of Intel China. Welcome, sir. Also in the Beijing studio, Professor Liu Baocheng, Dean of the Center for International Business Ethics from the University of International Business and Economics. Also join us from New York in the U.S. We're having Max Wolf, Professor of Economics from New School University. Welcome to the three of you, gentlemen. Thank you for being with us on the weekend. First of all, great revenue, according to the latest report by Alibaba to the world. 59% jump year on year. That's really quite something, Mr. Huang.
Yes, it is amazing, really.
Especially when it comes to revenues. Before, it was mainly talking about the volume, and now it reports separately, both the volume and the revenue. What does that mean?
I think that's give a more clear indication on the Alibaba's accomplishment, and in particular, which part coming to the company directly, which part is actually the merchandise and the revenue, not the Alibaba's necessarily.
And we have seen, Professor Liu, not only that because customers are using computers, but rather they're using smartphones. In fact, that number has hugely increased, exceeding those coming from the customers who are using computers. What would that mean for a e-commerce platform like Alibaba?
Well, I think China's continue to offer a large room for Alibaba to grow, so there's no really ceiling. Number one, given the improvement in the infrastructure like the mobile and 4G penetration into the users market. The other is that they're also spreading more from the urban area to the rural area, and so the business sophistication level of Alibaba is also there to generate more customer base.
Right, Professor Wolf, what do you make of the performance of Alibaba for the time from the beginning of the year until June? How is that performance compared to, let's just say, its international counterpart like Amazon and some of the others?
Sure. So, I mean, there's a much faster growth rate than we're seeing from anything else very large. To get year-over-year growth that's basically 60% on the top line for revenue, like we saw from Alibaba, is very unusual. That's a small company growth rate because small companies deal with smaller numbers. So certainly interesting. What's most interesting to us is that Alibaba has very well positioned itself at a bunch of crossroads for very rapid growth. So twice the growth rate, almost 115% growth rate in mobile and in cloud and in digital content. So what we see is that Alibaba is also becoming a leader in entertainment content and also becoming the leader in cloud services and also becoming a leader in mobile commerce. And that means that they're very well positioned for the future. And those are growth trends that we know haven't even reached their apex. So a great quarter, and maybe even more excitingly in the forward-looking context of the market, good indication of future growth as well.
Mr. Huang, at the same time, we've seen the advertising revenue on Alibaba's e-commerce platform has been increasing quite dramatically. And what would that mean? Because usually it depends on the revenue coming from the sellers and also from the transactions, but this time more on advertising.
I think that says Alibaba's the power or marketing capability expand in China. I think people in the U.S. may have some challenge to comprehend such a faster
astronomical
growth.
figure when it comes to growth rate of 59%.
But yeah, and within the 59%, obviously there are some of the revenues coming from acquisition. Even you take that part away, just incremental and growth is also very phenomenal. I think it's about 49%. I think the people need to understand that the e-commerce, the impact to the traditional business in China is a lot bigger than in the US. As I agree with Professor Liu, so that's why if you think about ceiling and for China's and e-commerce company, this ceiling is a lot higher than in the US.
Having said that, though, we're not here to do any specific advertisement for any specific company. The reason why we're talking Alibaba is because it's quite a business phenomenon. It is one of the biggest companies in the world, particularly originally coming from China. Having said that, Mr. Huang, there's one issue, of course, the SEC investigation, the probe SEC has been doing about Alibaba for what they call possible violations of federal securities laws. That was, of course, the accusation. The probe began in May. Now, several months have passed. This time, Alibaba, when made public, all these recent revenue and sales figures did say something about this probe. And yet, what it says is no update. So how should we understand, on the one hand, the very impressive number, once again, coming from Alibaba. On the other hand, the investigation seems to still going on, yet we do not know what exactly it is, at which stage it is.
It's quite normal for a publicly traded company executive not comment on the ongoing investigation, unless if the CEO is Donald Trump. That could be a totally different story.
Well, I'm not sure whether that comparison is necessarily viable at this moment, but go ahead.
So I think that's a normal practice, not comment on the ongoing investigation. So I think that's quite normal.
Right, but having said that, Professor Wolf, that's exactly the issue here, isn't it? I mean, the SEC investigation, some suggest, has a lot to do with the astronomical figure Alibaba reported worldwide about its sales on the Singles' Day, which of course is a man-made festival here in China, in which they purchase online just to celebrate so-called intimate relationships in a way. But having said that, what do you think, Professor Wolf, of the probe and now this new seasons of numbers being made public coming from Alibaba, and yet no update? according to the company?
So I would also say that generally we don't see a willingness to publicly comment, particularly if you're in talks with the regulatory authorities in the U.S. So generally we see it either as a non-issue or slightly positive. When a management declines to comment, it usually means that they're in the thick of negotiation, possible settlement, and discussion with the regulatory agency. So not usually bad news there. I think we do see Alibaba trying to get more culturally aligned with the greater expectation of transparency. And we've seen a long history of even leading Chinese companies, of which Alibaba most certainly is one, having some difficulty adjusting to the different normal reporting. And by the way, every country has slightly different reporting standards and norms. There's always an adjustment period. And part of what I think we see now is that, but everything that Alibaba does, because it's so successful and so large, is done under a brighter and a little bit more searing spotlight than normal. And I don't think that I would interpret this negatively at all at this point.
Professor Wolf, according to Alibaba, not long after after it voluntarily announced the SEC was doing an investigation and a probe toward it, it said also to the media, here I quote, it has been providing through its legal counsel, quote, requested documents and information to the SEC, end of quote. And yet we know, Professor Wolf, the argument from both sides is how much information Alibaba should provide to SEC. According to the current Chinese system, there are certain informations that Alibaba shouldn't and could choose not to provide. Well, the SEC prefers the other way around. So that is really the controversy. Is that a controversy a company can change? Or is that a controversy that the two governments really have to take time to work it out?
Yeah, so to see a real solution here, we need the regulators to work this out. What's happening is that the U.S. Investigative Authority is requesting the company release internal documents. And remember, what's listed here is the variable interest entity, or the U.S. sort of subsidiary vehicle for the Chinese company, and Chinese law has historically been pretty clear that those kind of requests should not be made directly by a foreign regulatory agency to a Chinese company. That's obviously something that needs to be fixed at the regulatory or at the national level, and it's not on the responsibility of, nor is it under the control of, an individual company, Alibaba or any other company.
Professor Liu?
Well, I think compliance is the bottom line for any company to operate in any type of market. So therefore, given the differences of different jurisdiction, so Alibaba is really put in a predicament, whether to comply with Chinese law or to comply with the U.S. law. But ethically, I would think that once they begin to operate in the U.S. security market, they got to follow the U.S. law and got to comply with that. I think, yes, the Chinese government regulators need really to find a way to work out a smooth cooperation, because we are going to see more of this type of Chinese companies are going to be listed, in the U.S. Financial market and vice versa.
Of course, the two sides, I mean, SEC and also China's CSRC, has reached certain kind of agreement, but that was only on very specific cases, and it was about criminal investigation almost. But on a larger scale, we are still far from it, right, Mr. Huang?
I think so. That's a dilemma for almost every U.S. listed Chinese companies. At one side, you're listed in the U.S., you have to follow the SEC law or regulation. On the other hand, as being a Chinese company, you have to listen to the order from Chinese government. It's a kind of dilemma for every company. On the other hand, I actually see this as maybe an opportunity for Alibaba to transform itself from a leading Chinese company to a truly global company.
What do you mean by that?
Because that's firstly, it's more transparent. Secondly, you follow more like international accounting standard, and etc. And also for their executives and how you handle this situation, and they be a more professional way, and also get better trained, etc. I think it is an opportunity for them to transform themselves up.
This is certainly a learning curve for them in a way.
Yes.
But, Professor Wolf, Alibaba is a listed company. At least at the very beginning, when the investigation was made public, there was some ups and downs to the Alibaba's stock. internationally speaking. So the question is, how much can a company shoulder the risks of being investigated and the name tag on its forehead that is being investigated, at least to the stock market?
Yeah, so it's a good question. Clearly, the result of the investigation is probably a bigger determining factor than the existence of an investigation. Inquiries and investigations are not uncommon, and inquiries and investigations don't always result in, a bad outcome. So I do think the outcome matters more than the process. And we have seen the shares, by the way, recover and regain past lost ground. Ultimately, unless we see a material decline in the ability of this company to have earnings and revenue growth, or if we find a major finding. So the other thing I think is if they were found to be 100% at fault with everything under inquiry, it would not be existentially threatening to the company. So we should keep in mind that even if everything that's being looked at comes out in the worst possible way for Alibaba, it is a continuing concern with a reasonably bright future regardless.
Professor Liu, do you agree?
Yeah, I would agree that I think the anxiety and the confusion among the U.S. investors really prompted the SEC probe into this case. And U.S. investors, they are seeing that the Chinese economy is on a downward pressure. How can a Chinese company really perform, so well? It's too good to be true. But if the result turn out it is good and it is true, so then they're going to earn a plus. But at the moment, it is not only the books that are need to be investigated, but it is really the counterfeit product that really creates a real problem among those investors and consumers.
We are seeing Alibaba facing quite a number of challenges. One of those challenges is counterfeiting. The other challenge is how would the new business models that Alibaba has been working on over the years be able to be realized? In other words, how can they find new cash cows? Okay, here is a driverless car, right? There is also the Aliyuan, which is cloud computing. But none of them has yet been the cash revenue generator so far, even though it is enjoying some growth. On the other hand, there's also the counterfeiting issue. There has also been some issues related to various regulations when Alibaba going to different markets, going to Southeast Asia, going to the United States, and many of these different markets. So, Mr. Huang, how do you think Alibaba is struggling at this moment?
I think a counterfeit issue is really a challenge for Alibaba. And put that one aside, I know Alibaba tried a lot of new things. As you mentioned, they have not been see the revenue yet. But just in its current business, I don't think they are running into a ceiling yet, at least in the next quite a few years.
59% growth, I mean, yeah, that's impressive. But things change fast.
Yeah, but you look at the percentage of online companies' revenue compared to the overall revenue, still small percentage. So a lot of room for Alibaba to grow.
All right. Professor Wolf, do you agree? Among all of these challenges, which one is the most important?
So, look, I think they also have a challenge with how they do internal advertising on search inside China. When you're a big, complicated company in multiple lines of business, you will always have many opportunities and many challenges. I still think that Alibaba sits at the crossroads of mobile, e-commerce, the emergence of the Chinese consumer, and a desire for digital content. So it is theirs to lose, and they're the biggest player in the biggest, most dynamic market in the world, and almost any other company would be envious of that position. I think that will still be the case in 6 months, 12 months, 18 months, and 24 months.
Okay, you said so, Professor Wolf. But let's take a look at some of the dilemmas Alibaba is also facing, even about this specific issues of SEC investigation. Alibaba affiliate, Cainiao Logistics Network, that is one of the issues why Alibaba is being investigated. According to the accounting standards of the United States, if a business is the main beneficiary of an affiliated company, its financial report must include the data of the affiliated company. Cainiao, 47% owned by Alibaba, isn't consolidated into Alibaba's account. Some experts said 60% of Cainiao's 15 revenue came from the Alibaba Group, and that Alibaba is Cainiao's biggest customer. But Alibaba includes the results from Cainiao using the equity method, which accounts for profits and losses as a proportion of the company's investment. That sounds a little bit technical, but it goes back to our earlier argument, Mr. Huang, that whether Alibaba, according to international standards, should include the revenues coming from these newly acquired companies or in which they're having a big percentage of share.
Well, let me comment on the Cainiao first.
Okay.
And, Cainiao is a money-losing company, so they're taking loss on 47%. Let's assume the other way around. And then acquisition is why don't you take the full and all the loss into your accounting. But if a Cainiao is a profitable company, if you're doing that, I'm pretty sure there will be an acquisition say why you're doing that. So I don't think that.
You're saying the acquisition is groundless. Is that what you're saying?
That's my opinion.
Okay.
I'm not an expert. I'll ask Professor Liu.
Professor Liu, you are being finger pointed already by Mr. Huang, so go ahead.
Well, actually, according to the Sarbanes Act, you really need to consolidate, and at least you need to make the book more transparent, and that's really a technical issue. They need to make up their homework. And the other bigger suspicion lies in the delayed calculation of those canceled orders. So that's something that, really, if you roll the cancel orders into the next quarter, then that's also a technical violation. So that's something they really need to fix if they really, operate within the SEC regime.
That's right. Professor Wolf, this is really one of those crystallizations of how much details really matter.
That's right.
Even one specific issue, one specific company could ruin the overall reputation of this world's largest e-commerce platform. Professor Wolf, what do you make of it?
Yeah, so I don't think the entire reputation is at stake. It is normal that the logistics units are much less profitable, sometimes loss-making, but they have much lower margins. And one of the sort of question marks around Alibaba is that it has historically been able to get and keep margins much higher than the regulators are used to seeing. And once that happens, they start looking for anything that might explain it. This is ultimately a pretty small issue, given how large Alibaba is and how small the logistics unit is. So I think it's more of a cultural tension, and I don't think, again, it would materially undermine the profitability or the growth. It's a growing pain and a cultural translation issue, which I think will be a footnote to a good history, but it is a footnote, and it's going to get attention now, and it's probably an irritant as opposed to a serious problem.
Right, and now, Professor Liu, Alibaba is such a big one, such a giant in the world because of China's market. And it is also reaching out to the rest of the world. As we said earlier, Southeast Asia, it is one of the places that is specifically developing. And it's also talking about being a pillar of the worldwide e-commerce platform. So, how much scrutiny should this company enjoy or deal with?
Well, most recently, Jack Ma also proposed the e-commerce platform, and yes, they are trying to lead not only in terms of business but also in the rulemaking process, and to get the political support from the leaders. And in the meantime, innovation will continue to support them to grow.
How much scrutiny should they handle?
I think as they grow into a global company, obviously get put under the spotlight. There's no any other way around. So let's take this as an opportunity and then to grow up.
All right. It seems that all of you are quite optimistic. Huang Jie, Liu Baocheng, Max Wolf, thank you so much for being with us, gentlemen. Thank you. Have a great weekend. Stay with us here on World Insight. We got our final segment coming right up. We speak with author and investor Jim Rogers, who shares stories on his travels across the continent and gives us an inside look on the world's emerging economies, at least according to his account.
I could still be sitting in front of a computer.
Welcome back. You're watching World Insight on CCTV News. What the world is like today, perhaps it depends on where you go for information. Some prefer to discover it in front of various screens. Others believe one has to be there to see it in person. Jim Rogers supports the latter. The legendary global investor apparently prefers to hold a high profile constantly and speak his mind, at least That is the impression he seems to project. When you ask him for evidence to support his views, he responds with his personal global tracker stories and fresh perspectives. Take it or leave it, that's up to you. But one thing's for sure, it's always good fun to hear from Rogers.
Adventures in the markets and on the road. Legendary investor Jim Rogers began his financial career after graduating with a bachelor's degree in history from Yale University. Then in 1973, Rogers and George Soros founded the Quantum Fund, one of the world's first truly international funds. After generating returns of 4,200% over 10 years, at the age of 37, Rogers decided to retire and quit full-time investing. He went on to travel the world a few times over and wrote a few books about what he saw and learned. His investment tourism books, Investment Biker and Adventure Capitalist, are still must-reads for anyone interested in learning how global markets work.
I ran into Jim Rogers most recently at St. Peter's Economic Forum. It was one of those rare occasions, in fact, that these days at least, where Westerner investors are seen in Russia. We sat down in our studio there where the conversation began with his grand global tour on a motorcycle. What are those trips for you? What do they mean for you as an investor and as an individual?
I retired early because I wanted to have more than one life. And one of the things I wanted to do was to go around the world on a motor. I wanted adventure. That was the main thing I didn't want to sit in front of a computer all my life. I wanted adventure, to see the world. I went around the world on a motorcycle. It took a long time to get permission. It was so wonderful. I did it again in a car. So, I mean, I like adventure. I like to see the world. I like to know what's going on. I could still be sitting in front of a computer. I'd rather not.
What have you learned through those trips? The biggest things you have learned?
The biggest thing is we're all alike, Tianwei. When you go to this place, they say, where have you been? Oh, I was there. Those are dangerous, horrible people. Where are you going? We're going, oh, you're going to get killed. We're all afraid of each other, but we're all the same. We all like to eat and drink and dance. We like to have a good time. But politicians tell us we're terrible and you should be afraid. Don't listen to the politicians.
Back in the year 1984. Wow, think about that. Jim, you were heroic in a way. You made a heroic trip to China on a motorbike.
I drove across China on a motorcycle twice. Yes, that's wonderful.
What was it like, 1984?
Oh, well, 1984 I was just asking permission, but in 1986 they let me everywhere I went. I mean, it was like a Martian. Here was a Caucasian, an American Caucasian, on a motorcycle. Mobs everywhere I went. And every time I drove across China for the next 10 years.
Because people are so curious about you. They've never seen an American.
They'd never seen a Caucasian. They'd never seen a big motorcycle like that. They didn't know what was happening. They thought I was from Mars. But it was wonderful.
What do you make of the Chinese economy? Because years back, you made a big decision. You moved to Singapore. You sold your house in New York. And you say future is going to be in Asia. And we've seen, though, after this round of financial crisis, the Asian economies also suffer a great deal. China looking for its own growth engine, working hard for any possibility of structural reform. So what do you make of your decision then?
Well, China will have setbacks along the way. It's normal. America, as it rose, had 15 depressions, a civil war, very little rule of law, massacres, and we were a mess. And yet, we became the most successful country in the 20th century. China's going to have problems. I don't know what, I don't know when, but everybody has problems. But don't worry. When I see problems in China, I'm going to take advantage. I'm not going to stop teaching my children Mandarin and teach them Danish. You know, the Chinese have a wonderful word which does not exist in English. Wei ji.
Opportunities and crisis all in the same time.
Yes. Yeah, opportunity and crisis are the same thing. Well, English, we don't have that. You invented the word. So when you see problems in China, take advantage of the opportunity.
What do you make of China's economy at this moment as an investor?
Well, the whole world, Tianwei, is having problems and it's going to get much worse. That's going to affect China. Japan is in recession. You trade a lot with Japan. Parts of Europe, parts of America in recession. So the companies which deal with the West, or companies in recession, are going to have problems. Now, Tinwei, it's very important to know also, China now has debt. You did not have debt for many decades. Now you have debt. So some companies are going to go bankrupt. Beijing says we'll let them go bankrupt, which is great. It's hen-how. It's very good, because then it will clean out the people with mistakes, and China can grow again from a new base.
But what do you make of the next round, the next few years in China, for example?
Some companies that deal with the West or the developed world are going to go back. If they have debt, they're going to go bankrupt. There's no question about that. But other parts of the Chinese economy, if you're in a pollution cleanup, you don't care if America disappears. You're so busy making money. If you're in healthcare in China, China needs enormous healthcare, and Beijing knows that. Agriculture, I'm extremely optimistic about agriculture in China. Some parts of the Chinese economy are going to go like that, and some are going to go like that.
But Jim, this is a very serious issue. Geopolitics, as we all know these days, are playing such a big role in economic prospects. What do you make of the current situation, particularly with the political fights that's going on now in your capital?
Well, every time I go to China, the Chinese people love America. They don't particularly love the American government, and I don't particularly love the American government a lot of times myself. I don't know why some politicians like to make their name by bashing other countries, whether it's Russia or China or whatever. It is a political problem, but China and America should be working together to have great prosperity for everybody. There's a lot of synergy.
But there's also a lot of talk about the strategic conflict between U.S. and China.
There should be no strategic conflict. That's in politicians' minds. I cannot think of any strategic. America wants to tell everybody what to do, and when China says, you can't tell us what to do, that's a conflict, but that's crazy.
Hotspot issue, South China Sea issue, territorial disputes, DPRK, nuclear issue also in Asia. Not to mention China and U.S. looking for their various positions in the world, even in the Asia-Pacific region. In the U.S., you have a U.S.-led TPP. In China, China is working on OBOR, One Belt, One Road initiative. Not to mention in Eurasian area, there's more of interesting ideas popping up. Jim, there's a lot of ideas, there are a lot of potential points of conflict, some would say.
The One Belt, One Road, it's brilliant. It's fabulous. It's changing geography. Not very often in world history does geography change. China's changing geography. Why is that a conflict? That should be great. A lot of people are going to make a lot of money. I don't see necessary conflict.
Are you a rebel of your culture? Because what you have just said seems to be very much different from many of the voices you could hear from where you are coming from. So is it because you're here in Russia? Is it because you're already living in Asia and therefore you go all the way to talk about your country in a very different lens?
I have always tried to look at the world as it is, not as I'm told by propaganda and media and other people. I'm trying to teach my children, don't listen to them, don't listen to anybody, look at everything and decide for yourself. And I've been doing that a long time.
The world is changing rapidly, and some say the great opportunities now lie in emerging markets. That includes countries which are not as advanced as developed countries, but have functional economies and infrastructures that are fast growing. But last year saw the weakest growth ever in emerging markets, marking a 5th consecutive decrease and the worst year since the global credit crisis. Russia is in a recession as oil prices tailspin and sanctions weigh heavy. China's growth hit a record low in 2015. Brazil is struggling with its worst recession since the 1930s. India is becoming more vulnerable to shocks with more external debts piling up. With growth being such a challenge for emerging economies, no one can be sure which countries will regain their glorious growth of the days past.
As a group, emerging economies, where do you think its future is?
Well, first of all, Tinwei, there's not such a thing as emerging economies. There's some great ones, some mediocre ones, and some disasters. So don't put them all together. I'm optimistic about things like Kazakhstan now, Nigeria, looking at Iran. I'm an American, so it's difficult. I'm wildly bullish on North Korea, but I cannot do anything. I'm an American. I'm a citizen of the land of the free. We're not very free in the land of the free. We used to be. I'm bullish on China. I'm not buying China, but China is going to be the next great country in the world.
Well, you were talking about the commodity prices. You said the high prices are the problems for the commodities. However, low prices are the solutions for the commodities. Is that still true today?
Absolutely. If there are high prices, people consume less and people produce more. If there are low prices, people produce less and consume more. So it drives the price higher.
But we have seen commodity prices going low for really quite some time. Economies such as Russia, in which we are in right now, St. Petersburg, is suffer greatly as a result of this. So is that logic still working? What is likely to be the future of commodity prices from your perspective?
Oil prices hit bottom a few months ago, and they're now going up again because low prices bring high prices. People cut production in a huge way. Many companies went bankrupt, and other people consume more. So the prices are going back up. Prices will be much higher in 2 or 3 years.
That sounds interesting. However, you have to consider all of these complicated factors. For example, there are alternative energies that are quite popular in the world, unlike before, and also a lot of geopolitical issues going on. So once again, is that logic still the logic today?
Tianwei, life is complicated. It's not easy.
Jim.
I wish it were easy.
That's why I'm asking you.
Wouldn't that be wonderful if life were easy? Of course, alternative energy.
I prefer it to be complicated.
Okay. Well, there is alternative energy, but it's not very competitive when oil is at $50. Most alternative energy has to be subsidized by the government, some government, whether it's wind power, solar power. They're not great yet. Now, at $300 oil, it'll be very competitive. They won't need subsidies. But at the moment, we have $50 oil. So, yeah, someday, but someday is not here yet.
Not here yet. Therefore, there's a big question mark for economies such as those depending heavily on energy and commodity prices, such as Russia.
Tianwei, my parents taught me to buy low, and Russia is low. Russia is hated. It is probably the most hated stock market in the world right now.
You are doing PR for Russia now, are you?
I said it's hated. It's cheap. When I see something that's hated and cheap, I like to go and think about buying. I don't always buy, but I came to Russia 2 or 3 years. Tianwei, I was negative on Russia for 47 years.
You did.
47 years. Now I'm bullish. I see it changing. And when something changes, I change.
Change in what way?
Well, at the Kremlin, they start to understand, well, we can't play by the old rules. We have to play by the new rules. We have to treat people properly. We have to help them invest. We cannot steal their money. So everything, and Russia has a lot of resources. It's not a big debtor nation. The United States is the largest debtor nation in the history of the world. Russia's not a big debtor nation.
Talking about emerging economies, you are not just testing with Russia. Previously, you were testing also with India. However, just a few years ago, you were making a very big public announcement saying it is impossible, using your word, to make a profit here. What do you mean exactly, Jim? And why India upsets you so much?
I didn't make a big announcement. India made the big announcement. I just said I'm selling India. It's very difficult to do business here. And I sold. Oh boy, they were crazy about it. India, they've got the worst bureaucracy in the world. The Indians learned bureaucracy from the English, and then they made it even better, or worse, depending. That's just very difficult. Mr. Modi, I thought, would be a very exciting politician, leader. He hasn't done much except talk. So I sold.
As simple as that.
It's as simple as that, yeah. But I didn't go, I mean, India went and announced it. I didn't announce it.
Jim Rogers, such a pleasure to have you.
Anyway, it's my pleasure. I'm
Good
a
to
fan
see you,
of
sir.
CCTV.
Thank you so much. Thank you for being with us.
Thank you.
That's Jim Rogers speaking to us from St. Petersburg a month earlier. That he is a provocative voice in the business world today, whose brand name seems to have been defined by his outspoken personality as a rebel. Whether you agree with him or not on his country analysis or investment choices, he has maintained his virtue of being a fun and unique individual. Some say a rare quality in the investor world. And that is all the time we have for today. If you'd like to see more of our program, visit our website. Just type in World Insight CCTV News into your search engine. You will be able to find us. Or you can also check out our YouTube channel. From me, Tian Wei, and everyone from the World Insight team, thanks for watching. And tune in again next week for more insights from across China and around the world. Good night and have a great weekend.